Now that we have completed our trial balance, the next step in our accounting cycle is adjusting entries. So we're going to go to the adjusting entry information. We see that we have 5. So first is that we have depreciation on our building. So this is going to be a depreciation expense. So a debit for $1,500. And then the credit for that is in an account called accumulated depreciation. And then we often identify what that accumulated depreciation is for. This type of account is called a contra asset account. It's called a contra account because it reduces the corresponding account. So this is depreciation on our building for $1,500. The next that we have is prepaid insurance has been used for 2/3 of a month. So let's put the accounts in there and then we'll calculate the amount. So we're going to debit insurance expense and we're going to credit prepaid insurance because we have used a month of it. So now we need to calculate it. So let's look at our original amount. So we bought a month for $7,200. So first we need to get a full month's expense. So we're going to take that 7,200 divided by 12. So this is 1 month insurance expense. So it says we use 2/3. So we want 2/3 insurance expense. So we're going to take this 600 times 2/3. And that's $400. So we're going to debit insurance expense for $400 and credit prepaid insurance for $400. Next, we were told that we have $1,525 of office supplies still available. Okay, so we are going to have an office supplies expense. And we are going to reduce the amount of office supplies that we have on stock. So it says that we currently have 2,400 in stock in our office supplies. So we did look, and of that 2,400, 1,525 are left. So we're going to take 2,400 minus 1,525 that's left. And it says we used $875 worth. So our office supplies expense is $875. Then we earned $1,150 of storage fees that have not yet been billed. So we're going to bill these and they're going to owe us money. So our debit is going to be for accounts receivable, because they aren't going to pay us cash until the next month. And we're going to invoice for $1,150. And this is storage revenue that we have earned of $1,150. And then our last one, employees earned $100 of unpaid and unrecorded salaries as of month end. Now we have a liability. We owe our employees $100 in money, but we're not going to pay them for a couple of days. So now we have a salaries expense of $100. And we have a salaries payable because we're going to pay that $100 later, but we have to record the expense this month because it happened this month. Okay, now we're going to put those into our T accounts. So first we're going to go to this depreciation expense. July 31st. And we are going to debit depreciation expense for $1,500. Then we are going to accumulated depreciation. And we are going to credit this account for $1,500. Okay. Next, we have our insurance expense. So just a reminder about adjusting entries, they never have cash in them. So never, ever should an adjusting entry impact the cash account. So it's July 31st because it's the end of the month, and we are going to debit insurance expense for $400, and we are going to credit prepaid insurance for $400. Okay. Office supplies, we have an office supplies expense of $875 and a credit to office supplies for $875. Like I said in the lecture video, the nice thing about computer software and accounting software is that unlike an Excel file where we have to manually do this, it would automatically be done. As soon as you posted a journal entry and you said post, they automatically record to the T accounts. Next, we have this accounts receivable and storage revenue. So we're going to go, it's July 31st, and we're going to debit accounts receivable for $1,150, and we're going to credit storage revenue for $1,150. And then the last one is that salaries expense. So we're going to go up here to salaries expense, July 31st. We have a debit of $100. And now we have a salaries payable of credit of $100. Okay, so now we're going to update the balances of those accounts. Okay, and then we're going to go to our trial balance. We have our adjusting entries. So we have depreciation expense of $1,500. So this, we've got accumulated depreciation of $1,500. We need to actually put that on the credit side. So this is how you do a worksheet adjusting entry. So I'm going to show you this Okay, so, and let's get the depreciation expense for the debit. And then we have insurance expense of $400 and a credit of $400. Then our office supplies expense of $875 and a credit to office supplies of $875. We debited accounts receivable for $1,150 and we credited storage revenue $1,150. And then the last one was salaries expense, which was credited for $100. For salaries payable, salaries expense, $100 debit, and salaries payable, a $100 credit. Okay, I'm going to pull this. I'm actually going to pull this all the way across. So it's just done. Okay, my debits equal my credits. I'm good there. So now for my adjusted trial balance, what I want is I'm going to take my assets, which are debits. I'm going to add any debit changes and subtract any credit changes. And I'm going to do that for the assets. Okay. So then I'm going to record these new ones that I have. The common stock didn't have any changes. Dividends didn't have any changes. This is a credit plus a credit. Then here we have, this will be the debit. Oh, I'm in the wrong column. Here. This original debit plus any new debits, and then we want to minus any credits if they were there, and all of the expenses are going to be treated like that. And you can see that I am not equal, and it's because this is in a debit and it should be in the credit. Okay, debits equal credits. My adjusting trial balance is all good. We recorded everything correctly. We're good to go. So now we can prepare our financial statements. Now, if you see the financial statement, here's the income statement. We have revenue minus expenses. So we do the income statement first. So sales, we're just going to come and take that right off the trial balance. We had sales of $10,950. And then all of our expenses, if they're in the same order as they are on the trial balance, I'm going to show you a trick. Okay, so we're going to take this salaries expense, and then I'm again going to copy that down, and it's going to bring all the expenses over. Okay, we're going to add those together to get our total expenses. And then I'm going to format. That's a number to get the commas. And then we have sales minus total expenses equals net income. Okay. Next we have our beginning retained earnings. Well, we didn't have any beginning retained earnings. We can go here and see that there's no balance here. So our beginning retained earnings is 0. Our additions to equity capital. Did we have any additional common stock? So 0. Now we add our net income. So I'm just going to take that right off the income statement. Okay. Now we're going to subtract dividends. Okay. So we're going to take the dividends amount of $2,000. And then our ending retained earnings is net income minus dividends. And then I'm going to format those as numbers. Okay. So we have ending retained earnings of $725, which we are going to pull right over here into our equity section. The rest of this, we're going to take off of our trial balance. So first our accounts receivable. So right there. So nope, they didn't go in order. Okay. Oh, we're missing. Okay. That's because we're missing. There we go. And then accumulated depreciation from our trial balance. And we're going to put that in as a negative number. So I'm going to go right here and I'm going to put a negative sign right there to give me a negative number. I'll format these as a number so it gives me the parentheses. Okay. And my total assets are all of these added together. Okay. So now I'm going to grab the liabilities. So we have salaries payable. And I'm going to remove this because this doesn't have a balance. We just want that salaries payable. And then we have common stock of 180,000. And I'm going to format these to all be numbers. So we have our total liabilities, which is $100. We add all three of these together. And then we have total liabilities plus equity. And our balance sheet balances, so our records are great. Now the only thing that we have to do is close our records. So for our closing entry, the first thing that we do is we close service revenue. Okay, service revenue has a normal credit balance. So to get it to zero, we need to debit it. So we're going to debit service or our storage revenue, and we're going to credit income summary. And this is for the amount in the account. So we look at our account, we have $10,950 there. So $10,950. Okay, so if we post that, so we go back to our T accounts, and on July 31st, we are going to debit service revenue for $10,950. So now minus debits plus credits, and we have a balance of $0 in there. And we now have a credit balance of $10,950 in income summary. Okay, so now we're going to close all of our expenses. So we are just going to take salaries expense, insurance expense, rent expense. To make this easier, I'm going to go and copy all of them right here. We're going to debit income summary. I'm going to take the values for all of those. We're going to credit every single one of those accounts. I just want the numbers, values. There we go. Okay. So now we have on July 31st, we debited for $8,225, and then we credited each one of these accounts. So, and for ease, I'm just going to type these in. So now we have a zero balance. Remember, the best practices would be doing an equals amount. I'm just saving time here by typing it in. When your closing entries are all done, all of your expense and revenue accounts should have zero balances. Okay, so we've done all of those. Now the last account that we close is dividends. So we're going to close dividends to income summary. So we're going to debit income summary and credit dividends. And the amount is $2,000. Okay, we're going to record that. Okay, so now we get the balance in income summary, which is the total credit column minus the total debit column. Okay, if you did your closing entries correctly, the balance in income summary should match the balance on your ending retained earnings. Okay, the very last thing to do is to close income summary to retained earnings. So we currently have a credit balance in income summary of $725. And so we're going to debit income summary for $725. And we're going to credit retained earnings for $725. Okay, we're going to record that. We now have a zero balance in income summary. We record our closing. So remember, these are the accounts that we closed. So our closing entries, we posted a debit. We have a credit to retained earnings for $725, and then we credited we debited storage revenue for $10,950, and we credited all of these accounts for the exact amounts that they were. Okay. Okay, so we see that our debits equal our credits. So now in your closing trial balance, you should only have balances. These should all equal out to 0, and we should only have balances in these accounts. Okay, and we're looking at this here and we don't equal. And so we're like, why don't we equal? Okay, and now we equal. And consequently, another way to check this, like this should be the same exact amount as your retained earnings on your ending retained earnings statement. Our trial balance should be the same amount as what's on our so we should have our debits should equal our credits, and everything's good. So that is an entire accounting cycle.